स्टैंड तो बरकरार तो रहेगा ही, लेकिन जितना लंबे समय तक के लिए बरकरार रहेगा, देखिए इसीलिए बैंक निफ्टी ने इतना नीजोक रिएक्शन देखने को मिल रहा है। एनबीएफसी स्टॉक्स जो आप कह रहे हैं, देखिए भागते हुए नजर आ रहे हैं। पिरामल एंटरप्राइजेस की बात हुई थी, अब देखिए 6.5% ऊपर है वो स्टॉक। एल&टी फाइनेंस होल्डिंग, एलआईसी हाउसिंग फाइनेंस, ये सारे स्टॉक्स में क्या गजब का मूव देखने को मिल रहा है। कुछ देर पहले हम लोग श्रीराम सिटी यूनियन फाइनेंस की बात कर रहे थे। डॉक्टर साहब एक बार लाइए वो स्टॉक भी, जहां पर आप अभी अभी कह रहे थे ब्रेकआउट देखने को मिल रहे हैं। आप देखिए सारे के सारे स्टॉक्स में गजब का मूव ऊपर की तरफ देखने को मिल रहा है। तो श्रीराम सिटी यूनियन फाइनेंस में भी देखिए एक अच्छा एक्शन बनता हुआ।
जी हेमंत जी, बाकी सारा एनबीएफसी स्पेस और बैंकिंग स्पेस इस पॉलिसी के बाद हरे निशान में है। श्रीराम ट्रांसपोर्ट फाइनेंस को आप देखिए, लगातार तीसरे दिन उसमें आपको रैली आती हुई दिख रही है, और ये इनकी ग्रुप कंपनी है सिटी यूनियन फाइनेंस, जहां पे आपने एक बहुत अच्छा स्पाइक देखा। श्रीराम ट्रांसपोर्ट फिलहाल 5.5% ऊपर चल रही है, और इसी के साथ प्रो आईसीआईसीआई में भी आपको एक अच्छा 4% की तेजी आती हुई दिख रही है। प्रो आईसीआईसीआई फिलहाल आपके सामने 494.90 के आसपास चल रही है। मुन्नमपुरम फाइनेंस में वापस तेजी आती हुई दिख रही है। तो बैंकिंग फाइनेंशियल सर्विसेज, एनबीएफसीज और बैंक्स, वहां पर आपको बहुत अच्छा एक हरा निशान आता हुआ दिख रहा है। एडवांस डिक्लाइन रेशियो निफ्टी बैंक में आपको 11:1 आता हुआ दिखेगा। और फिलहाल जी हाँ, शक्तिकांत दास साहब अब अपनी स्पीच शुरू कर रहे हैं।
रिजर्व बैंक टू द लास्ट मॉनिटरी पॉलिसी ऑफ द करंट फाइनेंशियल ईयर and what also happens to be the first monetary policy committee press conference of the new calendar year. So there is an element of consistency between the last meeting in December and this meeting in January, in terms of the fact that we have kept the rates unchanged and the stance also unchanged. So there is continuity, but it should not be read as a pointer for the future action of the Monetary Policy Committee. The Monetary Policy Committee will be guided by the evolving situation and take whatever steps are required at the appropriate time in the most opportune manner to optimize the impact of various monetary policy actions. So with these words, I would first like to make the statement. Thereafter, my colleagues and I, we will answer your questions. Over the last 3 days, that is during 4th, 5th and 6th February, the Monetary Policy Committee met and assessed the current and evolving macroeconomic financial conditions and the outlook. After extensive and drill-down review and discussions, the MPC voted unanimously to keep the policy rate unchanged. It also decided to continue with the accommodative stance as long as necessary to revive growth while ensuring that inflation remains within the target. While this decision may be on expected lines and perhaps widely discounted, it is important not to discount the Reserve Bank of India. It has to be kept in mind that the central bank has several instruments at its command that it can deploy to address the challenges that the Indian economy currently faces in terms of the sluggishness in the growth momentum. Consequently, even though the present monetary policy decision is constrained by elevated inflation pressures, there are other ways in which the RBI can strive to revive growth. I know I have whetted your curiosity, but first let me briefly explain the main considerations underlying the MPC's decision. At this stage, I would like to express my gratitude to the MPC members for their insights and careful evaluation which shaped the policy decision. The MPC's resolution has just been released on the RBI website. I also want to thank our teams in the Reserve Bank for their continued high-quality support to the MPC's work through their hard work, research and logistics. The MPC noted that since its meeting in early December 2019, global economic activity has remained subdued. However, some variations in macroeconomic performance are becoming evident among major economies. In the United States, pace of growth has been broadly maintained in the second half of 2019. But in the euro area, the United Kingdom and in Japan, economic activity has slowed down in Q4. Among emerging market economies, the Chinese economy decelerated to a 29-year low in 2019, while a loss of momentum was manifest in Russia, Brazil and South Africa. Crude oil prices have softened from mid-January with a sharp fall towards the end of the month, triggered by the outbreak of the coronavirus. With international food prices rising on higher demand and supply disruptions, inflation has edged up in some major advanced economies and EMEs. Global financial markets remained resilient in December 2019 and January 2020 as thawing in US-China trade relations thawing US-China trade relations and improved prospects of an orderly Brexit buoyed investors' sentiments. Turning to the Indian economy, the first advanced estimates released by the National Statistical Office on January 7th placed India's real GDP growth for 1920 at 5%. In terms of high-frequency indicators, both production and imports of capital goods, which are two key pointers of investment activity, continued to contract in November and December. Government expenditure, especially that of the central government, is, however, providing counter-cyclical support to the domestic demand. On the supply side, Rabi sowing has been higher by 9.5% up to January 31st, 2020, compared with a year ago. And horticulture production is estimated to have risen by 0.8% to a record level in 1920. Industrial activity improved in November after contracting in the previous 3 months. The output of core industries returned to positive territory in December after 4 months of contraction, which augurs well for the December 2019 industrial production print. Capacity utilization in the manufacturing sector, however, fell in Q2 of 1920, even on a seasonally adjusted basis. Manufacturing sector faced weak demand conditions in Q3 1920, though business sentiment is improving. This is corroborated in the Manufacturing Purchasing Managers Index, PMI, which picked up sharply in January 2020 on the back of increased output and new orders. In the services sector, several high-frequency indicators have turned upwards in the recent period, such as tractor sales, which represents rural demand, domestic air passenger traffic, an indicator of urban demand, three-wheeler sales, railway freight, and port traffic. The PMI Services Index also improved sharply in January, boosted by a rise in new businesses and output. On the other hand, passenger vehicle sales contracted in December. Retail inflation measured by CPI surged to 7.4% in December, the highest reading since July 2014. Food inflation rose to double digits, primarily caused by a spike in onion prices due to unseasonal rains in October-November. Excluding onions, in fact, the headline inflation would have been 5.2%. Prices of several other food subgroups such as milk, pulses, cereals, edible oil, egg, meat, fish also firmed up. Fuel prices moved out of deflation. Inflation in CPI excluding food and fuel, that is core inflation, continued to edge up from its October trough. In the external sector, merchandise exports continued to contract in November and December, reflecting the slowdown in global trade. Import growth slumped further in November-December, reflecting the underlying weaknesses in domestic demand. Net foreign direct investment, however, rose to $24.4 billion in April to November 2019 from $21.2 billion a year ago. Net foreign portfolio investment was of the order of $8.6 billion in 1920 up to February 4th, as against net outflows of $14.2 billion in the same period last year. In addition, net investment by FPIs under the voluntary retention route has aggregated $7.8 billion since March 11, 2019. External commercial borrowings were higher at $13.4 billion during April-December, as compared with $2.5 billion during the same period a year ago.